Hello everyone, hello. Welcome to my channel and welcome to the channel of education and the channel of making money through the stock market. But first we need to be educated. What does that mean? We need to know what's going on. We need to understand what's happening. The goal of this channel is to make sure you understand the stock market before you go in it. The goal of this channel is to make sure you realize that you only make money when everybody else is selling. You buy when everybody else is selling, and you sell when everybody else is buying. That is the way. You do not try to predict the market. No, what you're trying to understand is you want to take advantage of the market. You want to take advantage of the market because the market is like a child. The market is like a child is looking for entertainment constantly. If it likes something, like it liked Nvidia for the longest time, you will be handsomely rewarded. But if it doesn't like it, even though they keep producing great report with, as we've seen at Nvidia, great earnings, they will punish you. Why? Because it's a very capricious child. It doesn't like surprises. Keep that in mind. The market does not like surprises. Okay? And it's about to get lots of them. But that's okay because we understand the market. We want to take advantage of the market. We're going to take advantage of its volatility. But before we do anything, we got to make sure who we listen to. Okay? I am going to create a couple of videos for you. And let's put some comments on that because some of the stuff is just plain incredible. And it has to be put under context. Let's listen to our good friend Tony Robbins. I mean, the guy has been around for a long time. He's not, but he's trying to build his brand and see what he says. Yeah, again, what I've been telling you all along, that the market is only trying to attract you through the gain only. You're gonna become a millionaire because of the gains. It's not just about the gain. It's about the protection of the book. Sure, you could have made that much more money in private equity than you have in the S&P 500, right? Yes, you would have been a lot more money. But what about the risk? You just can't say things like that. You can't just say, this is good because I make more money. What about the risk? If somebody asks you, okay, you know what? Close your eyes and cross the highway. And if you reach the other side, they give you $1 million. You're not gonna estimate the risk of crossing the highway. You're just gonna go right through it. You wouldn't do that, right? You wouldn't do that. You wouldn't cross the highway. You would say, well, hold on, I don't want to die. But yet, in something like this, they're actually saying that. That's what they're saying. He's telling you basically cross the highway so you could make $135 million investing with private equity instead of just walking down the street and only making $35 million or some smaller amount. That's the point. They do not and they never talk about the risk. And do you know why they don't talk about the risk? Because you would not understand what it's about. You would not understand the risk. You would not understand what it means. You wouldn't understand how to calculate. It would scare you off and you would not listen. And the goal of this thing is to make sure you listen, you buy, you follow, and you don't understand. Okay, so don't do it that way. Do not follow this type of advice, or at least if you're listening to it, understand both sides of it. Next, let us talk about something extremely important. Okay, what's going to happen next in the stock market? What is going to happen? Can I make money? Please help me. Now, look at very carefully what's happening right now. The market is down, okay? That means people right now, people that know, they are buying on the dip. They are buying on the... Look what's happening. Look, I'm going to show you two videos, right? Look at those two videos. Look what one is telling you. It's the same from 8 hours and 7 hours ago. 1 hour difference. One has 18,000 views. The other one has 106,000 views. So let's take a look at the first one.
Set ourselves up. Host for many people was a vacation week. Stephanie Link, Hightower Chief Investment Officer. She's a CNBC contributor. School is back in session, and so are the markets. Stephanie, what are you doing?
Good morning. I'm buying. I was adding last week to a few names in Broadcom, in CrowdStrike, in Chipotle, and I think...
Now, obviously, let's be careful. Whenever the chief investment officer is telling you that they're buying, I think it's a great idea. Thank you very much. But it doesn't mean, well, let me just go buy the stuff, right? Because she's buying, that must be good. Well, and this is another thing. Again, this is one-sided, although it's not really the comment I'm trying to make here. It is one-sided over here because she's just telling me what she likes. She doesn't tell you what she has, right? Because sure, I'm adding these positions, but if some dudette in the streets buy the stock, right, and that's all they own, then they might be unbalanced. They may have too much risk in one position. So you just can't come out really and tell someone, okay, just buy the stock. What does that mean? Again, it's like cross the street without looking at the risks, okay? But that being apart, because that's all they do, and frankly, if they had to explain to you everything, you wouldn't understand anyway, because they have to explain to you the Sharpe ratio, the standard deviation, the correlation, everything that goes around crossing the street without being run over. So they will not explain to you. But let's forget that argument for 1 second. But let's take a look at what she's actually doing, because I want to make a point about her view, which seems to be positive.
You want to be adding to stocks on weakness if we get it. And today we're getting it a little bit. September should be likely a little bit volatile. And I think you want to use that weakness to be adding.
Which is basically what I've been saying, right? You're going to, because the goal is, okay, what's happening in the market right now? What's happening, right? Well, what's happening? We're all waiting in bated breath for September 18 for the Fed to lower the rates. Now, of course, we don't want them to lower too much because that will mean that we may be closer to a recession than we thought. And we don't want that. We don't want him to lower it because he's beaten down inflation. He has won. So he doesn't need to lower it that much. But the fact of the matter is that we do have a market that is kind of insecure and unsure as to where we're going to be. But that's okay. Like I said, we're not trying to predict the market. Nobody can do it. Nobody could do it. If they could do it, then you have to run away from them. But we're going to take advantage of it. How we're going to take advantage of the market is very simple. We're going to play it whenever it's feeling weak, we're buying. Or we could go with options like I've been doing for the past couple of days. Follow me on my Patreon and you could see my trades. You could see exactly what I'm doing. I'm taking advantage. I don't know what the market is going to do, but one thing I do know, everybody's nervous. And I will show you why everybody's nervous. So let's keep listening to what this lady has to say.
I mean, we got through two big hurdles over the last couple of weeks, Andrew. We got through Jackson Hole. We had a very dovish Fed Chair Powell. And then we got through NVIDIA, which was actually quite good. I know.
When they say they got through NVIDIA, they thought that, oh my God, NVIDIA is going to be disappointing. We're going to lose the stock market because of one stock. Says who says things like that? Okay. That's what they say. They assume, and they are so relieved that NVIDIA doubled its earnings, but still the stock didn't go anywhere. In fact, it's losing its shirt right now, but be careful. This is not going to be for the faint of the heart, but there's opportunities there as well. But the point is, they have assumed that the market would drop because of NVIDIA. It didn't, and the Fed was dovish, so therefore we know what they're going to do because they told you what they're going to do.
Sold off on the news, but the numbers were really good. The AI boom continues. And so in the meantime, you have the economy growing. We had a GDP second quarter that was revised higher to 3%. The Atlanta Fed tracker for the third quarter is at 2.5%.
The GDP was higher than we thought. What recession are you people talking about? The one that no one is saying, okay? And I love this because we're going to take advantage of them.
You had pretty good PCE on Friday, and so I think all...
PC is basically inflation was under control, which means the Fed is going to say, you know what, I don't need to keep rates that high. Therefore, I'm going to lower the rates because of inflation again, not because I'm concerned about recession.
That translates into pretty good earnings, and so that's why I want to be adding to weakness if we get it.
You said you think this is going to be a bit of a choppy period. We always wonder how choppy it's going to be.
Yeah.
when you think about both the number we're going to get on Friday and also overlay the election, that's what we were talking about earlier in terms of, I said there was going to be, there's a...
Now, don't forget, we also have a major issue is that because we have to go through an election, right? An election by themselves create insecurity, but that's okay. That creates more volatility. You want volatility. At the end of the day, people, we are going to go into the AI age. I will show you a chart that shows you, basically has to do with fractal, right? Every so many years, gains are going to be tremendous. Why? Because we're entering a new age. We enter a new age with AI. And soon, you haven't heard about it, but you will hear soon, a new age with quantum computing. You're going to need that. This is going to revolutionize everything. I know we're working on stuff right now. You have no idea the type of project that are undergoing right now having to do with AI, having to do with alternative data in a way to measure, to grow. Look what everything that NVIDIA is into and all these other stocks.
From Labor Day to Christmas, Joe said there's a sprint for 68 days with the sprint to the election in the middle. It's the intermission.
63 days.
It's the intermission of the big show. So how does that matter or not in your mind right now to how equities are moving?
Well, yeah, I mean, I think you are going to see some choppiness over the next couple of months. But again, if I look at kind of what the economy is doing, the economy has been resilient.
Okay, she's basically, listen, did you hear what I just said? I'm telling you, the economy is resilient, we're okay. So stop being nervous about everything. You want me to tell you exactly what's going to happen? I can't tell you what's going to happen. I could tell you it's going to be volatile, but I could tell you everything is going to be positive.
I mean, this is an economy that just won't quit. And if you look...
The economy just won't quit. You know why? Because the consumer won't quit.
At a lot of the data that I just mentioned.
Well, maybe the stories that get you scared of the stock market. So you're looking at the other way, or you're selling the position where certain people are buying.
Better than expected. I think Friday is going to be fine. I think
She's mentioning Friday, she's talking about the unemployment. Everybody's going to concern about the employment numbers, right? Because if it's too low, right, meaning that we're losing jobs, then they're concerned that the Fed is going to say, so we have a recession. So whenever it is that they're going to lower rates, let's say they do 75 basis points instead of 25 basis points, it's going to look like we are in a recession. And then the fearmongers are going to be into it.
Maybe we get a little bit of chop on the news, but I think overall we are growing. If we're growing 2.5% in the economy, earnings can actually be 8 to 10%. And you can see it broadening out. We are starting to see a broadening out.
Now, of course, let's take a look at the Russell 2000, people, because Russell 2000 is going to benefit extremely from lower rates. Why? Because lower rates are good for small companies. Lower rates are good for financing of small companies are growing. They need financing. And they don't do well when rates are high. Rates have been high for the longest time. That's why the Magnificent Seven has been out there. The Apple and all these guys have been doing great. But now that rates are going to start going down, and these guys have, when I said the Magnificent Seven, I mean, when you think at NVIDIA with a P of 57, way above the 37, 36 for the S&P, the market, we are overbought, we are overvalued, right? So now what's going to happen is with the advent of lower rates, it's going to start favoring the small stocks, which haven't done anything, haven't gone anywhere. Look at my video from yesterday. I give you 10 wonderful stocks with low PE, with growth, with absolutely no debt. What else do you want? But of course, you got to be buying when no one else is buying, which is a bit uncomfortable.
Encouraging, Andrew. I mean, this morning you've had some of the banks.
And of course, crude prices are hedging lower, which means inflation is going to be further down. Because, of course, when we say inflation, by the way, we're talking about the CPI, and the CPI is a basket of energy, right? So the energy, you have to depends on what it is that what they mean by energy. It's housing, it's income, it's a bunch of different things, right? So then they use that number as inflation.
I mean, they're trading like 1x book, and they have great dividends,
And of course, take a look at the CBOE volatility index, right? Yes, I mean, there was a huge spike, right, on August 5th. What was that all about? Well, I mean, you know what? That was the day before they heard that unemployment went from 3.4 to 4.6. They say, oh, 4.3. And they say, oh my God, unemployment, this is it, it's over. No, unemployment is caused by a tremendous amount of new people entering the workforce, not by lots of people being fired. Same people working, it's just we have more people looking for jobs, so therefore the ratio gives the impression that unemployment is going up, but it's going up. Sure, it's going up, but it's going up for the right reason. We just have to find jobs for these people. But even if it wasn't the case, 4.3% is not such a great bad number for unemployment. Now, of course, on top of that, we had this surprise. And I told you, the market is like a child. The market doesn't like surprises. And look what happened. You know, we went from around 16 to like 40 or something in August. That's a huge spike. And volatility, by the way, is measured by what? Option on the S&P 500. This is how people are trading this thing, right? So it creates volatility. And that volatility was spiked. And that's a problem, obviously. We don't want to see that kind of volatility. I mean, we have seen higher volatility around 60. 40 it wasn't too bad, you know, considering the fact. But it's gone, we're back down again. So everything is calming down. Relax.
Capital. And so that's a sector that I really like. Industrials, I really like because you have this whole renaissance going on with onshoring, reshoring. Right. The consumer is choppy, mixed, but I think you have some winners and losers. Winners are Target, Walmart, and Costco. Everybody else, I think they have some.
I love the way they mention names that they own, you know. I'm just owning it, and if you buy, it's great because it's going to pump up my book and it's going to be great. I mean, at the end of the day, she's got to be paid for what she's doing. She's not coming in for free, right? So she goes out there to drum up business for our portfolio, essentially.
There are some issues there, but I think you can pick and choose.
Give me the tech AI story in your mind right now, because I think that there's still it feels like such a jump ball at this point.
No, I mean, I don't think it's a jump ball. I think the stocks have actually had such a nice run. So it's hard to, you know, the risk reward is not great.
What she means by the risk reward, she basically is saying, listen, you pumped up the volume so high on AI and NVIDIA that we had 56p is too much. I don't know what too much really means, right? Because if you think about it, so this year it's 53, basically we're paying, for every dollars of earning, right, we're paying 53 times per dollar of earning for NVIDIA. That's a lot, yes. But next year, if they double their earnings, the P ratio is not 53 anymore, it's like 25. So maybe you want to get it on 25, but it looks like a 53, but it's in fact a 25, right? And that's what she means by it's overboard.
But I do think that you're still in very early innings. You've got a total addressable market of like $1 trillion.
That is totally true. I mean, we're just inkling, looking. We haven't gone into what AI can really do. And trust me, I've seen some of the stuff that some of the people are working on. It is huge. Stuff that you have not even thought about. Something very simple. You know, you think that you're looking at, you know, financial statements and you're trying to understand, you know, how am I going to predict the stock based on the financials, right? Forget that. But we're up to, we're looking at what people are saying. We're looking at how people are saying it. And we're using that as a means to predict what the stock is going to do. How you do that? Well, a human cannot do that. Now, all the hedge funds are doing it, right? So are they going that way? They're doing it this way. And therefore, it's going to change the way they trade. They're going to disregard the financial stuff and they look forward to this other stuff that is much more complicated to analyze, much more in depth, and probably more accurate.
I thought it was very interesting last week. Marvell reported a good number, and it was their AI business was good, but it was their non-AI, the cyclical businesses that are starting to see a recovery. That's why I like Broadcom. I don't want to play it for the quarters per se, but I do think if you have AI and the AI orders are running up something like 200% for Broadcom, and then you have now the cyclical part, the non-AI business, which Marvell just told us was actually recovering. That business for Broadcom, their orders grew 30% last quarter. So I think that there are ways to play it. I think you definitely want to have exposure, and you want to use the volatility to be adding to those names.
We're going to hear from Apple about a week from, yesterday, in terms of Monday next week, with their new product offering, the new phones and everything else. Do you buy into the sort of whatever you think the Apple move is going to be ahead of that? Do you wait to hear what you're going to...
Please tell us. Give us some prediction. Tell us what's going to happen next.
See? Do we pretty much know what we're going to see?
Well, the stock is up 30% from May. And so actually, I've been trimming Apple. I like it really a lot for the long term, but I do think that the expectations are a lot higher. I do think you are going to see a whole refresh cycle, but I don't know if it happens right away, Andrew. And while it might be exciting what we hear about and for the long.
I mean, look at this. I mean, January, August, we went from like 160 to 140. I think that's enough. We have 20% return. That's a great return.
Term in terms of AI and in the phones and the refresh. But I'm not sure we're going to get a lot of answers next week. And the stock has run quite a bit. So that's why I was kind of taking some profits. Everybody hated this thing, right, in the spring. And that's when I was adding to it. And so now people, are really jazzed up about it. And I think it's time just to take some.
She's a contrarian. I like her. She's a contrarian. You buy when everybody else is selling and selling when everybody else is buying. So right now, she's buying.
Some chips off the table.
No, I like, of course, chips off the tables. Like what? As in the casino table? Exactly. I mean, are we gambling or are we investing here?
But like Buffett took him out earlier.
Well, the reason that Buffett unwound his position in May and June, is because according to him, he is concerned about taxes. He thinks that they're going to tax the rich, so he better take his gain now as opposed to later, because that could be a lot. Of course, some people say, no, the reason why he sold all of his position in Apple, or most of them, or in Bay of A, is because he thinks the market is going to crash. Okay? So that one, believe it or not, this kind of positive view, got about, They got about 18,000 views or 19,000 views. Right now, let me show you the other one that got 110 times more.
There's Tom Lee, managing partner and head of research at Fundstrat Global Advisors, as well as a CNBC contributor. And all along, Tom, when you've made these prescient calls, some of them even short term, it had to do with positive surprises on inflation. And is that going to be enough from here on out to keep the market headed higher, or have we shifted to growth worries now?
Because you see what I mean? They actually is mentioning it. So far, we've been getting wind because of the fact that the Fed is going to lower the rates because inflation is under control. So that's good, right? But now they're saying, yeah, but should we be concerned that this actual decrease is because of the fear of recession? Because that's the case, that's bad. If it's not, it is good. Let's see what Tom Lee. Remember, this thing got 10 times more views.
I think there's probably more growth worries in people's minds these days. So the jobs reports.
So that's not good. So now, obviously, this is negative news. So now, this is negative. Things are going to happen. And therefore, people are more worried about the fact that we are going to be shooting into a recession.
And claims seem to have more market reaction. I think that's going to be the case in September as well. I mean, we have the Fed meeting sort of in the middle of the month, but this week is the jobs report. I'm sure there's going to be a lot of focus on that.
Meaning a lot of volatility. Again, remember, don't try to predict. Take advantage of the volatility.
Right. So, what kept you positive was that the numbers were always, for the market, they were better than people were thinking. Is that going to continue to be the case? But it's no longer inflation, it's now growth. So growth will continue pretty good. Jobs will continue pretty good. You're not worried about another growth scare.
Please tell us what's going to happen. Tell us the future.
Like we had 6 weeks ago.
I think that the growth scare is what everyone's worried about, because the July jobs report was kind of a shock to markets. And
now he has to be careful, right? He has to be careful here. The guy's saying what's going to happen. He has to be careful, because if he says that, you know what, recession is coming, and it's not, he's going to look stupid, right? Because the numbers don't show any recession, but yet the people fear the recession. So what do you do in a case like that? Well, I don't know. If you keep pushing recession and people selling, you could be buying what they're selling, knowing that there's no recession.
That's part of how we had that Tokyo Black Monday. I think this jobs report for August is going to show a nice rebound for growth in jobs.
So that's good. If you have a rebound, therefore, it's okay to lower rates just because of inflation.
Hopefully it's not too strong, because, of course, as you know, if it's too strong, people are going to worry the Fed might backpedal in September.
Well, I don't think that I don't think it's going to be too strong. I mean, we are slowing down. We're not going to be rebounding, because what he's saying now is if it's too strong, then the Fed is going to say, you know what? I'm not going to lower rates because we still have an inflation problem. I don't think so.
Cut.
So where does that leave you in terms of what is seasonally, Andrew just alluded to it, September's not great, and we know, I mean, we always make lows in October, or we have many times, which means usually a lot of times September was not great.
I think investors should be cautious for the next 8 weeks. September.
Next 8 weeks, be cautious.
Yes.
You're not always cautious.
That's right. When the market's been up 7 of the 8 months this year, so we know it's an incredibly strong market, but we also have the September cuts and we have the election, things that'll get people nervous.
Well, he's wobbling around here. So are you positive or you're negative?
I think in the next 8 weeks, people get a chance to buy.
Okay, so basically, he's basically saying what I'm saying, which is take advantage of the volatility.
I think it's good to be cautious, but just ready to buy that dip.
You have, because you're fearless and you'll say anything, you have in the past actually talked about election-related trades and Trump trades. And do you see anything going on now that indicates anything to you?
Can you tell what I need to do so that my viewers know will do what is it that you want him to do, even though they don't understand your portfolio?
Bitcoin hasn't been acting very well.
Yeah, Bitcoin hasn't acted well.
Keep in mind that when Trump got elected, and we'll talk about politics at some point, but when Trump got elected, just before he got elected, Yellen actually raised rates on him. So that was nice. Like you said, it's not very nice. And of course, the Fed is, and of course, she got rewarded later on with a nice Secretary of the Treasury position, right, with the Biden administration. I don't know, coincident, who knows? Now, of course, the train of thought right now is to say that, you know what, if they think that Trump is going to win, wouldn't it be nice to keep rates high, right? Remember, if rates are kept high or brought up, it's going to destroy the stock market, could potentially send you tipping into a recession, for real this time, just when Trump gets into office. Wouldn't that be something? So be careful how politics played a role. Of course, there's no way he's going to raise rates, right? Unless he sees something, or unless the unemployment numbers are shooting up. I mean, shooting down a lot, right? Very strong unemployment number, very high inflation again. Then maybe they may want to raise the rates. So then you could have a problem. But if he just needs an excuse, he may just find it. Be careful.
Or production.
More production.
Bad
yes.
for price. Which is not necessarily the way that you might think about things, because we hear about, we're at records for oil production. No one realizes the reason we're at records in this country is because prices were so high that it caused a lot more drilling and activity. And the prices were high because it's harder to drill without and LNG and everything else the Biden administration did.
Yeah, that's right. So people think oil should be higher here for many reasons, but oil's been weak. So I'd say that's...
Well, oil is weak. That's great. So inflation is kept under control.
That's China too, though, isn't it?
Yeah, China and...
Anyway, you get the basic idea, right? The basic idea being that you need to make sure you understand the environment that you're in. You need to understand what the story is. And you could see there's kind of two stories. I'm not going to repeat myself, just rewind. There's kind of two stories, but you need to understand what those stories are, because they are very important, because they're going to dictate what's going to happen. Right now, the way you want to take advantage of the market is that you want to buy on the dip and you want to play around with some options, right? But understand what it is. Don't forget to subscribe. Don't forget to like. Don't forget to join my Patreon channel so you could see some of my trades and better understand what I'm trying to do to take advantage of this ever-moving market. Expect a lot of volatility. Just because it's going down doesn't mean it's bad. It's just that it's going down. That's all it means.